Hello and welcome to another educational video brought to you by Trading Room, hosted by myself, ChingasX. Today we're going to be talking about the RSI indicator, Relative Strength Index, what it is, what it can do, and how to use it effectively. This will be the educational portion to the RSI scanner. That's already out and that's on tradingroom.io. So let's get started. Hosted by Trading Room, presented by myself. Let's go through the disclaimer real quick. I'm not a financial advisor. This is intended for educational and entertainment purposes only. So please use your own technical analysis. Nobody wants to see anybody get wrecked. Let's talk about the contents here. Looks like a lot, but don't worry, we're going to cover it all. What is the RSI indicator? What is momentum? How is momentum relevant to trading? What can the RSI indicator tell me? Adding the RSI indicator to the chart, so we'll throw it on, we'll go through some options, how to make it look all pretty. The overview of the components, and we're going to talk about 70-30, 80-20, 85-15, 95-5, 14-7, and 2. So if that sounds Greek to you, don't worry. You're going to leave here knowing exactly what all those things mean. We're going to get into leading and lagging indicators just real briefly. Just want to cover that quickly. And then we get into the meat and potatoes of RSI. Divergence, center line, entries and exits, stop losses, trend, continuation and exhaustion, reversals, breakouts, swing failures, support resistance, and overbought and oversold conditions. So let's get started. What is it? Well, RSI is a momentum oscillator. It measures the velocity and the magnitude of price action and building a ratio between the low and the high in a given period. Default is 14 periods. So if you're on a daily chart, 14 days. You're on an hourly chart, 14 hours. It does some calculations behind the scenes. It spits it out onto a 0 to 100 scale. And by default, you're given a 70 upper line and a 30 lower line. And we're going to talk about all those in detail in just a minute. But I do want to at least let you know what RSI is. It tells you many more things than just overbought and oversold conditions. And we're going to go through all of those today. So what's momentum? In order to understand RSI, you should have a grasp on what momentum is. It's the rate, the rise and fall of the price of a coin. So when a price moves up rapidly, it is considered it'll eventually be overbought. And when a price moves down rapidly, it will eventually be oversold. So you want to consider velocity and magnitude of price change, how quickly it changes, which would be the velocity of it, and the magnitude, the strength in which it changes, the amount in which it actually changes. How is momentum relevant to trading? So if a given coin is moving strongly in a trend, right, then it should continue to move in that direction, as we can see in this example here. It is in an uptrend, right? Even though you have some slight pullbacks, it's still moving up. Now that is until the trend loses strength. So we can see that we're moving up, and RSI is telling us it's losing strength. It's coming down, down. And right about that zone, we start to see it reflected in the price action. So what can the RSI indicator tell me besides just overbought and oversold conditions? Well, divergence for one. Divergence from price action. So we'll get into that a little bit. Center line, support resistance, overall price action bias. So if you're looking at the 50 line, anything above the 50 line, you can consider this is bullish. Anything below, you can consider bearish. We'll get into that in a little bit more detail. Entries, exits, stops. You can make decisions on where you're going to place trades using RSI. Trends, continuation and exhaustion, the strength of the trend. You could trade breakouts right on the RSI indicator itself. You see higher high, lower high, higher high, lower high. You could draw that trend, put it down on the higher lows, and if it were to break, you play the breakout south. Swing failures to exit trades or to enter in the opposite direction. We're going to get into that a little bit. Support resistance from previous RSI data, and of course, overbought and oversold conditions. So let's get to the charts. We're going to add the RSI indicator, we're going to set it up, and then we're going to familiarize yourself with what it's doing. All right, so we already have it on here. Let's go ahead and get rid of that, and we'll start fresh so everybody's on the same page. So head on over to indicators. Very simple, just type in RSI. It's going to be a built-in indicator on TradingView. There's nothing magical about that. This is how your RSI indicator is going to look. I can make it a little bigger so it's a little easier to see. In any area of here, you can simply right-click and go to settings, and we're going to talk about the different options you have once you have it on your chart. The length is this is that 14 period that we were talking about. Currently, we're on a daily chart, so we're looking at 14 days worth of data is what's giving you the results on the RSI. If we were to change this to 7, now you could see how much has changed, right? It's not as smooth as it used to be. It's very similar to an MA and an EMA. Now let's bring it to a 2, and you'll see the difference here. Look at that. That's crazy. So what you're looking at is, instead of having an average of 14 periods, you have an average of 7 periods. Now we're looking at an average of only 2 periods. That's going to give you a lot of different signals more quickly, possibly more noise, possibly more false signals. Default is 14, but we're going to talk about how you might be able to use some of the other ones to your advantage. And of course, you can go to style just like anything else, any other indicator, and you can make it as pretty as you want. You know, chart beautification is necessary. So that's it. Boom, boom. Nice and easy. Now I'm going to make it a little bit thicker so it should be a little easier to see for the video, but again, these are all just preferences. Now over here, where you see upper band and lower band, all right? This is where we mentioned earlier 70-30, 80-20, 85-15, so on and so forth. This is a visual representative line, right? That'll be painted across your RSI indicator. It does not change how RSI calculates the signal or what it's putting out in the line chart. So that's important to remember. You could change it to whatever you want. It's just a visual thing. If I were to change 70 to 80, you'll see it change on the screen right here. And now what was once overbought is now not. Okay, so we'll talk about how that becomes relevant in trading. But for now you have it on. It's on your chart. And let's continue with what we're talking about here. So an example of 14, 7, and 2 is the difference you see on the 14 here, right, the 7 here, and the 2 here. You can visually see how intense it is. 14, much smoother, way less triggers as far as becoming overbought or oversold. And then the 7 adds a lot more. And then, of course, the 2 is just, you know, pure insanity. All right. As far as lines are concerned, upper and lower, 70-30 by default. I put those as blue. The orange is your 80-20. The green is 85-15. And the yellow is 90-10. Now, how do you get these on your chart? It's real simple. You just add a line onto the chart. Know that it's not going to stay there from chart to chart. You could do it for something that you chart all the time, and then it'll be sort of baked into that chart and that RSI. But it's the same thing as adding a horizontal line onto your chart. We're on Ethereum, Bitcoin, Binance. If we go to Ethereum, Bitcoin, Coinbase, you're not going to see this. Okay, so it's the same deal. Very simply put, you take a horizontal, you throw it on, and let's say I want 85, no problem. You click it, grab the coordinates, and say I want 85. All right, done. Just like that. It's very simple. You can hold Option Command, you can just drag that down. And let's say you want to do a 15 line, no problem. Double click it again, throw on the 15, and all right, now you're set up for 85.15 with your default still at 70.30. Or you can go back into settings. Let's do that. Let's go back into settings. And you could change it right here. Okay, 80.20. I'm going to leave 70.30 on for a few examples we got coming later. So let's not get too far in advance. Let's talk about leading versus lagging indicators. Leading indicator, such as the RSI, is it precedes price movements. It has predictive qualities. It's leading the move. It's giving you the idea that something is in a strong trend, or maybe it's about to reverse trend. It's losing strength. Whereas a lagging indicator follows price action. It's based off of historical data, similar to Bollinger Bands or moving averages. Those are good examples of lagging indicators. Lagging indicators are also, they have more of a focus on the actual trend itself. Now, let's get into RSI. Divergence. Divergence, I feel, is the secret bread and butter of RSI. Maybe the most valuable part of RSI. So we need to understand it, recognize it, and then apply it. All right, there are many different divergences, and yes, this looks pretty crazy, but just remember you have a bullish divergence and a bearish divergence. Each one of those also has a hidden bullish and a hidden bearish, and then you have an exaggerated bullish and bearish, and that's based off of double tops and double bottoms. Now, bullish, you're always looking at the lows. All right, between price action and your indicator, you're always looking at what is it doing to the lows. So is price making a lower low and my RSI is making a higher low? That would be a divergence. Now, vice versa would be hidden bullish divergence, which you have, you'll see over here, you'll have a low and a higher low, but you're making a lower low and a lower low on RSIs. That's your hidden bullish. Two things to remember here. Bullish is an indication of trend reversal, all right? Where hidden bullish is an indication of continuation, all right? That's very important. So if you do see, let's say right here, we spot hidden bullish divergence, what we're looking for is continuation in that trend. Now, bullish standard is what I call it, which is just bullish divergence. Price is making lower lows while your RSI is making higher lows. All right, this is an indication that you could be looking at trend reversal. All right, now everything applies to bearish. So bearish divergence, now we're looking at highs. We're not looking at lows. All bearish is high. So bearish standard, we're looking at higher highs and the RSI lower highs. So this is what we have on this example. We have a high and we have a higher high. At the same time, RSI is giving us a high and then a lower high. So now we have divergence. This is bearish divergence standard. This is your typical normal bearish divergence, in which case we would be looking at some type of reversal. Now, if we look at hidden bearish divergence, it's still on the highs, but going the other way. So we're looking at a high and then a lower high, right? Where the RSI is doing the opposite, right? We're getting a high and then a higher high and a higher high. So we're looking for continuation in trend, and trend is continuing down. And you can see that that little monster down there. Then you have exaggerated bullish and exaggerated bearish, where price is doing a double bottom, RSI is giving you a higher low, and then the exact opposite for exaggerated bearish. That is divergence. That's something that you are going to want to notice. You're going to want to practice. You want to back test it a little bit. You want to be able to get familiar with recognizing it. It's very powerful stuff. Next on the list, center line, midline. Now you can call it anything you want, but it's just the 50 line on the scale. Now, of course, as we know, it doesn't come with a 50 line. So we can just add one in. We're going to take this, we're going to drag it down, we're going to throw some coordinates up there, we're going to hit 50, and we're going to call it a day. Now we have a 50 line. Okay, that's exactly what it looks like. The 50 line is unique to the RSI for unknown reasons, but it tends to lend its hand in support and resistance. And you can see that just on this example here. You know, we sort of danced around the 50 for a little while, broke through it, but came back, retested the 50. You'll see this on every chart, every time frame. There's this relationship with 50, and I feel that it's important. Again, you broke down and you came right back, retested the 50. Momentum was up, right? You stopped at the 50, you lost the 50. Now, some people will look at the 50 line and say, hey, just a quick glance, if I'm above the 50 line, right, then I'm trading long in that day or that time period. Once we're below the 50 line, then I'm shorting. That's another quick way just to get a bias, an overall bias on what you're looking at or what you could be looking at as far as trend is concerned. And you can see as we're over the 50, price is moving up, over the 50, price is moving up, below the 50, price is moving down, below the 50, price is moving down. So you can see how you can quickly recognize something using the 50 line. It does overlap into other areas of RSI. Center line can be used as an entry and exit. It can be used as stops. Not to mention what we just talked about, support and resistance. So really cool stuff you could do just with center line. Entries, exits, and stop losses. I mean, you hear this all the time. You know, where do I enter a trade? I see a good setup, but I don't know where to enter. I don't know where to exit. Don't know where to place my stops. You can use RSI in confluence with price action to make some of those decisions. So in this example here, you had price was moving, or RSI was moving up while you had sideways action in the market. And you're one of those people that says, you're a trader that says, well, I'm going to play overbought and oversold conditions. And when it touches down, you know, on the lower band, that's my indication to go long. So two ways to play that, using center line as one theory and using the upper and lower bands. You can enter when it hits the 30 and comes back up. That could be your entry. Or if you're more conservative, less aggressive of a trader, you can wait until you cross that 50 line and then make your entry there. Now you would have lost a possibility of losing a portion of that move or a large portion of that move, but it's a safer entry. Now you're within trend, hopefully, and you're taking the rest of this move up now through the 70. Where your 70 could be a profit target. It could also be an exit target, or if you were short, then that could have been your stop loss. But in this example, we came up, the aggressive trader would have entered here on the cross, all right? The conservative trader would have waited for some type of pullback and then another crossover. So they would have entered right here. Now, a majority of the trade is over in this example, but it is just one way to use it. Another way where you can take a look at your exits or your entries and, again, your stop losses. So it is a very good way to sort of check yourself if you were going to make a trade and you already had different targets set. As RSI makes its way there, it's a good way to look back and see, hey, what was RSI doing when it did finally reach my target, and what was I on the same page? Let's talk about trends, continuation and exhaustion. So the exhaustion of a trend is just as valuable as the continuation of a trend. If you're trading long and you got in early on an uptrend, you want to know when it's going to stop. And, obviously, and you want to know if it's going to continue to go. RSI can help you with that. It also lends its hand to divergence, which can be used to spot things easily. But it's the same old higher high, higher low for confluence from price. RSI can draw, you can draw right on the indicator, so it's a quick look for bias. And this is what we talked about, center line over 50 bullish, below 50 bearish. But what we're looking at here is look at all of this trading that's happening above the 50 line, right? And we're making higher highs. So we're in an uptrend. We're in a bullish uptrend. We cross over a little bit of a dip down here, right? But before it even made its way down to the 30, it reversed course, came back, crossed the 50, checked itself with a pullback, and then continued on. So we could see this is a nice uptrend. But now here, we broke the 50, and now it's lower than the 30. Now it's lower than the last time we broke the 30. Now you have the indication, right, that we're reversing course, right? Trend exhaustion. The trend has got tired, okay? And that you could see over here, the trend has worked its way down past the 50 and has now made a lower low, and now it might be time to either exit the trade or look at your options that are on the table. All right, trading breakouts using RSI. In this example, we see a higher high, a higher high, and a higher high, and then we see two lower highs. So once you have 2 points, right, 2 anchors, now you could draw a trend line. So we see on here price is moving up. It's got a couple pullbacks, but nothing crazy. It's making its way up slowly. We drew our trend line up and drew our trend line from above and below. Now, anticipating the breakout from down below, you would have gotten that breakout right here. Now look at where price was at the time. It was basically the height of that trend. So very powerful stuff. If you were to trade that breakout, this is where you would have gone short or exited your trade. Now it did come down again on that 50 line, finding support, kicking back, doing a retrace, now flipping your breakout line from support to resistance and continue to go down from there. And then all of that would have been in your short trade. So very, very, very cool stuff, very powerful stuff. Let's go over some of the notes over here. Breaking the trend would be an entry point, but can also be an exit depending on up or down, long or short, all those different areas. First break is aggressive. Waiting for the retest is conservative. So as a trader, you have, different ways you could decide how you want to make that trade and whether you want to be aggressive with it or whether you want to be conservative with it. And you always, always, always want to be mindful of and careful of counter trend trading. RSI works excellent within trend. Once you counter trend, it's a whole nother animal. So you have to be very careful about that. All right, let's get into swing failures. This is another really cool way to use RSI. As you approach, let's take this example right here. As you approach your 70 line or whatever you have marked as your upper line, you cross over it and then you have a bit of a pullback. The next time you cross over it, you should make a higher high. If you've crossed the 30, then you're looking for a lower low. When you don't make that, now you've entered into a swing failure. What that means is you fail to make the higher high, and when RSI starts coming down, you end up making a lower low. So you've breached that support line that you could draw from the first pullback. All right, so I hope I explained that clearly, but this is a picture of exactly what I'm talking about. Price came up, or RSI came up, crossed the 70, had a pullback, so it made a low. It came back up, crossed over again, but failed to make a higher high. And when it came down in this area, which is the support line from the previous low, broke. So again, this is your aggressive entry, and this is your conservative entry. All right, so you have an aggressive entry. The second you don't make that higher high, you're going short. And conservative, once you've breached support of that previous low from the pullback, that could be an indication to enter and go short, or the opposite of true if you're going long. All right, so swing failures, very cool. Another way to use RSI. Now we mentioned before support and resistance. We're going to talk about that again. This is a good example of the 50 line. So RSI is doing its thing. It's up and down. Well, price is it's sideways, but it's bearish. It's slightly bearish. You did make from here, right? You made a higher low, but then you went completely sideways, making lower lows until this little, this little fall off right here. But look at the reaction to the 50. 50 line, 50 line, 50 line, 50, 50. These are all these are 50 lines. Now what I have over here, right, is looking at previous RSI historical data. So yes, we have made this low. Now that's support. We can use that as RSI support to give us an idea of what price may do when RSI approaches that. If you get a good bounce off of RSI and it starts moving up, you could have the indication that price is going to move. Price is going to go to the upside. So again, very cool stuff you can do with RSI. All right, and then probably the most common use of RSI, overbought and oversold conditions. And in this example here, this is Ethereum, Bitcoin on Binance on a daily chart. And you can see as it crosses over the 70 line, that's your indication. You could start looking to go short, cross over the second time and down. That would have been your short entry right about in this ballpark. So you did miss a little bit on the upside, but you actually caught the wave down. You would have traded this all the way down. This would have been your indication, possibly reversing course, but you would have waited for the cross. You got the cross, and then you could have exited your trade in this ballpark, or you could have waited until you crossed back over and got you somewhere in this zone. So real quick, brief example. We're going to go over a few more examples, but this is the classic overbought, oversold conditions, breaching the 70 or the upper line, and then breaching the 30 or the lower line and playing the trade in between. All right, so we're going to go onto the charts. We're going to go over just a few examples. That'll just hopefully give you a better idea, but that's sort of the educational roundup of RSI. That's the overview. That's all the things you could do with it, and then how you can explore it. So we'll throw this on here for now, and then we'll go hit the charts. But I appreciate you watching. I really do. You could find Trading Room. You could find the RSI scanner and the price action scanner on tradingroom.io. The next video is going to cover, now that you know the basics of RSI, the next video will cover the RSI scanner. Also on that site, you'll find news, market cap blogs, educational stuff, the whole 9 yards. It's worth checking out. You can find Trading Room at Twitter, at Trading Room app, on Twitter, at Trading Room app. And as far as myself, Twitter, at ChingasX. You can find me on YouTube, BitTube, and Twitch as well. Twitch, the handle has the X in the middle, so you'll just have to, you just have to figure that out. But let's go to the charts, because that's the exciting thing, right? So this is actually the example that you just saw in that last slide, but there's a few things we can look at here that are good to look at, right? Just right off the top, you can see RSI making a high, right here, and then just about making the same high, but didn't quite make it. So you could take any type of indicator, or do what you need to do as far as putting the lines on here. I don't like that so much, so I'm going to get rid of it and do this. Is more what I'm used to, and I can do something like this. So slightly different. We'll zoom in a little bit to make it a little bit easier to see, but this is an indication that you've lost strength, right? You've lost overall on the daily. Now this is a huge time frame to look at, but this is relevant information. Again, you could go down here and connect these lines and try to make a breakout play. So as as your trend line is on here, now what you've created is a support line. Okay, now we didn't even hit support on this zone right here, but if we were to hit it and break it, that could be an indication that you might want to go short on there. Now, as far as these lows are concerned, again, more lows, right? So this is another way you could play this, where you could do something along these lines. Now you want to take a look at the chart and see. Remember, if you're dealing with lows, right, then you're dealing with bullish divergence. So if you're making lower lows, right, on RSI, you'd be looking to make higher lows on price action, which would give you hidden bullish divergence. So as you made this low here, you're right about on this candle, right? And then you made the next low here, and you can see, all right, well, that's low. So you're making lower lows and lower lows. That's fine. Or not this guy right here. So you're good. There's a relationship there, right? There's no divergence. Everything's fine. Now I go from this low, which is this guy right here, to the next low. Now the next low is way up here. So we have a problem, don't we? We have this. We sure do. So this, and if you shorten this back, let's say you wanted to play that, right, as it was happening. So let's say none of this exists. You see RSI is making a low. It's making another lower low. And you take a look at your price and you say, well, price is not making a lower low. This is making a massive higher low. So this is divergence, right? This is good divergence. So when you take hidden divergence, right, you're looking for continuation of the immediate. And that's what we got. We got the immediate continuation, which is this trading right here. Okay? So that worked out. That particular play worked out. You could have taken it when it crossed back into the 30. So again, another strategy just on top of the first strategy, crossing over back to the 30, ride it through the 50, and then exit the trade at the 70. So you would have been able to, you know, capitalize on, let's say, the first touch would have been less aggressive. So your conservative trader would have gotten out in this ballpark, where your heavier hitters might have rode it out to when you crossed it back over. If they got faked out on the first cross, then they would have taken it right here and they would have gotten out of that trade, which is an excellent, excellent exit off of that trade. Again, you want to have confluence with other indicators. You want to have confluence with your price action, maybe horizontal support resistance. If you were to come over here and say, you know what, these levels over here look pretty interesting as far as the walk down, you know, before the big dip, and hey, look at that, we're coming up on resistance, right? So that could have been another indication that, hey, I want to exit this long. All right, so you do want to be able to use it in a bunch of different ways, not just, you know, for what you have. So over here on the high side, right? So if you're looking at highs, you're looking at bearish divergence. So you got a high, and a high. So let's draw this and see what we're looking at here. You know, so something similar to this, and then you have to say, well, what are we doing over here? You know, if we're looking at higher highs on the RSI, do we have, you know, lower highs, right? And if we do on price, then that's hidden bearish divergence. So for the first two, yes, this would have been an indication here. And then when you got to the third one, right, not so much. So this third one here is almost to a double top, right? So you had divergence up until, you know, this zone. So this was your divergence. And then this, you had your high, and then you had a higher high, and then you have your high here, and then a higher high. So this is acceptable trading, whereas your play would have been this move down here, and that would have been your immediate move after divergence. So we had something like this, when you said, okay, the next move, you know, should be continuation. This is hidden bearish divergence, and you got continuation, okay? You want to try to work on your higher highs and your lower highs, your peaks and your valleys, your troughs, the whole 9 yards, And by adding multiple ones, you're missing the plays in between, right? So this played out just fine. So from peak to peak, you know, is sort of what you're looking at. And that'll give you the indication of what should be happening next based off of what the RSI indicator is telling you. So again, we talk about the 50 line. You can see in this example, you know, it's all over the 50, finding support and resistance. Again, over here, finding resistance, coming back down, breaking through, right? And then this is the ultimate retest. But at that point, you've already headed all the way down to the 30. So it's, you know, it's null and void. But coming back up and then coming down, a little bit of hesitation where right at the 50 line again. So you could see how that works. You could see previous levels, you know, if we come over here and say, just like we were talking about, horizontal support and resistance on price action similar to RSI, where this area of historical data acted as resistance, and you got the same repeatable right here. And as you come up and through, that didn't quite make it. This broke over, but it really did hang out there for a little while. And again, you know, hesitation on it. So it did act as some level of resistance, not so much support on the way down. Not too many examples of that. But again, there's so many things you could do with RSI that, you know, to cover everything in you know, crazy detail would probably be a few hours. This is what you can do with it. Now go explore it, right? Now throw it on your chart. Look at it on a daily. Look at it on a 12-hour, 6-hour, 4-hour. See how it looks on a 5-minute chart. Remember, the data seems to be more relevant or more important on the longer time frame. So it gets a little inaccurate when you start getting into the 5-minute and the 15-minute, especially if you're going to cater down to a 7 or a 2 period instead of a 14 period. But there are options where you could do, let's say, a 90-10 with either a 7 and a 2 on a 15 or a 5-minute chart, and really get an idea of, you know, what the next move is in the very immediate future. Like anything else, you want some confluence, so you would have to use that with price action or previous levels of support, resistance, volume, you name it, whatever the case may be. All right, so that is that's it. That's a wrap for the RSI portion. The next video, whether you've seen it yet or not, will be the RSI scanner, talking about how to use that scanner effectively with trading, and you know, how you could do that best to your advantage. All right, saving time and looking at the right charts with the right setup. So that being said, my name is Chingas. Very much appreciate you guys watching this. Again, it was hosted by Trading Room. TradingRoom.io is the site where you can find the price action scanner and the RSI scanner. And that's it. That's a wrap. So we'll come back at you with the next educational video. Until then, I want to see you on the exchanges, and happy trading.